Almost all of my money is invested into the stock market, and that's about several six figures. But often when I talk to people and ask them how they invest their money, they tell me they don't invest their money because they're scared to lose it. They say it's too risky. Or some also hide it behind investing is not my thing. So maybe you're also scared to start investing. Then this video is for you because we go over the 5 most common fears that hold people back from starting to invest their money and how to overcome them. So let's dive in. Fear number 1 is that it's too risky, I could lose everything. And I totally get it because your money is hardly earned and you don't want to lose it. And that is also a totally normal reaction because of this thing that's called loss aversion. That means that to lose something for us is much harder than the pleasure of gaining something. The irony when it comes to personal finance is that by not investing your money, you actually lose money too. And that is because of inflation. The tricky thing with inflation though is that it's not obvious. For example, let's say you save up $100,000 and you keep it in your bank account. 10 years from now, it's still gonna say $100,000. But in 10 years from now, you will not be able to buy the same things from those $100,000 than you are now. So you can imagine inflation like a mouse gnawing on your cheese. And let's say hypothetically you hold on to that you don't want to invest your money. In order to be able to afford the same things in the future, you would need to save between 2 and 10% more every year to level out the inflation. And even then there will be costs, for example when you retire, that you cannot predict right now because we can't actually tell how rent or medical bills are going to develop in the next decades. So not just in my personal opinion but also many other investors' opinion, by not investing your money somehow you actually have a greater risk of running out of money when you get older. So how do we overcome that fear? We can acknowledge that there is risk in investing, but when we learn the basic principles of investing, it's not a I could lose everything kind of risk. It's more like a calculated risk we take. And I think it's important to understand that there is a difference between, for example, taking on a loan and investing that loaned money into a high-risk company that then goes bankrupt. And in contrast, for example, taking a small portion of what you already own and putting it into different kind of stocks over a long period of time. Because by our asset allocation and also our time horizon, we can significantly reduce the risk of investing into the stock market. Fear number 2 is missing knowledge. I don't know enough about investing, so I don't start in the first place. A friend of mine told me his story a few years ago. He read about this one company in the news and he thought that it would be successful. So he invested several thousand euros into that one stock. And then he looked into the chart every day. Also when he was at work, he saw it go up and up and up and he was ecstatic. But then he also saw it drop. And then he panicked and he sold everything at minus several thousand. So it really took him on the whole emotional roller coaster. And I think there are some things that he didn't know at the time. For example, that it's normal for stocks to go up and to go down. That the whole economy is going up and down every couple of decades. That the way he treated the stock, buying at a relatively high price and selling at a low price, is actually the biggest trap of private investors. So not knowing enough about investing in the beginning, I think, is a very legitimate reason not to start yet. But personal finance and investing is something that you can learn too. It's something that is figure outable. So to overcome that fear, you can just take the time to research a little bit. There are some great books out there and you can just pick someone that you trust and you can model what they do if they are in a similar situation like you. So who you can actually trust can also be a tricky question. I think a good hint can always be if they back it by research, because there have been some huge studies about what works and what doesn't work for private investors. So if it's backed by actual numbers, that's always a good sign. Fear number 3 is that it's only for the rich. I don't have enough money to invest. I actually made a similar mistake when I was still a student because I somehow thought that I couldn't invest into the stock market unless I earn my own money. The truth is that these days you can actually start investing with as little as $1. And there might have been times where the threshold was a little higher, but not anymore. And another truth is that people actually became rich by investing their money, or at least they preserved their wealth by investing their money. So just starting here is very important, even if it's very small. And especially at the start, it's actually okay to start with small amounts so that it's something you can afford to lose. And also get a sense of how it makes you feel to invest your money. Fear number 4 is market volatility. Like, oh God, I can't take seeing the red numbers and my value going down. I admit that I personally don't have that fear. For some reason, I can handle a crash very well. And for me, it feels more like a summer sale. But I do understand that it can be scary and that it can also be difficult to not get as emotional as the rest of the crowd, because in every down and also in every up there is an emotional crowd. That's why one of my favorite investors, Andre Costolani, said, you should buy stocks and then take a sleeping pill, and after a few years you will be rich. Because that way you don't run the risk of panicking with the rest of the crowd and selling with a big loss, because it's really only a loss if you sell. So how do we overcome that fear? When you know that you're very risk averse, you can just personalize your investment strategy. Then you can choose a higher percentage of bonds, which are very safe, and also cash in your portfolio than stocks. And I think at some point you also need to trust your investment strategy. So you took the time to research, you picked an investment strategy, you adapted it to your personal situation. At some point it's okay to just let it work and not obsess over it every minute. And fear number 5 is making mistakes. And that includes making investment mistakes on your own, but also being afraid of getting scammed, for example by some financial advisor, and also overcome negative experiences that you might have had in the past. That friend I told you about who sold his stock at a loss was so drawn down by this experience that he didn't invest after that for quite a while. And I think that is the actual mistake, because making mistakes, especially making small mistakes like this, is just part of the game. And it's an opportunity for us to learn from them and to make better decisions after it. I think there are some mistakes that we should avoid at all costs. For example, to take a loan and invest that loaned money into the stock market, because that is something that can potentially bankrupt you. But small mistakes where you maybe lose a 2-digit or 3-digit or 4-digit amount, that is something that you can tell yourself, okay, I learned this the hard way, but now I know. If you're interested about what I regret the most about investing, I linked a video here where I tell you all about my mistakes in the past. Thank you for watching, and I'll maybe see you there. Bye bye.